Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody. Today guys, let's take a look again in the gold market, but I would like to show you a bit different picture because you probably already have tired from the same analysis day by day, so you probably remember our butterfly that we have discussed a couple of weeks already. I mean that butterfly with the target is approximately 1120. Today guys, I would like to attract your attention to some nuances and non-obvious moments on the gold market on the daily, because if you will plot here the MACD predictor, you will see that it's a bit not quite obvious price behavior. So you see that trend in general has shifted bearish, but the price action can't say that's really accelerating downward, and it always is a warning moment for investors, so for traders. So when they see the trend has shifted bearish or bullish, they expect an action, something of that sort. So trend has shifted and downward continuation, upward action, the price behavior that supports the trend shifting. While here you see that trend has shifted bearish, but price action is not really quite bearish. It's mostly flat, and do not see any acceleration. Very choppy actions, overlapping candles, deep retracements, forward, backward, again some mess here. So it's really why we think that you could ask why then Forex Peace Army thinks that market is really bearish and why it should continue to move lower and so on. If we will not take into consideration the patterns that are forming on the high time frame charts, particularly speaking on the weekly and the monthly, because these time frames also have really significant patterns. Especially on the weekly chart, we have the gathering of the bearish grabbers, we have bearish dynamic pressures on the monthly and on the weekly. But let's look clearly on the daily chart. Why we think that market is really bearish. And here you could understand why some nuances is really very important. And when you pay attention to nuances, you could get a lot of information. At the first glance, you just take a look at this chart and what really, imagine that I will erase all the markings. What could we say here? So yes, some sort of the action, consolidation maybe. It's very difficult. What to expect? Whether the market will go to the upside or it will go to the downside. It's not quite clear. But not seeing this consolidation, some visible patterns or something of that sort. That's why today, guys, we will take a look a bit differently on the gold market, particularly on the daily chart, and we will try to understand, catch some new information from the markets that I have made here. And let's start from the consolidation by itself. So we could say that since the March, market mostly stands flat, and we could draw this some kind of the rectangle, some sideways consolidation. And first event that has happened inside of this consolidation is this failure breakout. So you can see that was really failure breakout. Market returns right back down, some kind of the even maybe wash rinse of this top. And all of us know the feature of the failure breakout. We know that as soon as breakout has happened, failure breakout has happened, it usually leads market to the opposite border of the consolidation. And that indeed has happened. In fact, market has formed some kind of the ABCD inside of this consolidation. That's great. So that breakout has worked nice. It's downward. What we've got after that, we have another breakout. It's right here. What has happened? Market wasn't able even to reach the opposite border of this consolidation. Well, that's okay. Let's see what will happen next. Further drop lower here, another failure breakout. So market has tried to attempt to move lower, even below these lows, but has failed and returned right back up. And what we see at that moment, market wasn't able to reach the opposite board. It was not able even to pass through the middle of this breakout. Yes, this coincides with the monthly pivot point right now, but who cares? If market wasn't able to return back, take a look. That was very tight consolidation. I will show you. Right? Take a look. It's really tight consolidation here. That's the level that market will protect here. This was support. It's resistance. It's again, that's with resistance. And market wasn't able to return back inside of it. Okay, it's failed. So here, guys, we see how market becomes weaker and weaker within this consolidation now forming. Okay, first was reasonable bounce. Here it was minor bounce and failure breakout again. And if we imagine that here we have not 4 candles, but just 2, imagine that this is the first candle, it's white beam candle to the upside, and this black candle to the downside. In fact, guys, here we have the huge bearish engulfing pattern right at the major resistance 1215 area. And here, this action could be just minor retracement back inside of the body of the engulfing. That's very common action, you probably know that. So when the market forms the engulfing, very often, and as a rule, we could say even as a rule, market forms minor retracement back inside of the body. And after that happens the acceleration according to engulfing. The invalidation of the engulfing right in the top. So usually engulfing leads to appearing of some ABCD based on its bars, based on this signal. So that's why we see that even poor statistics data, as ADP report, as the recent non-farm payrolls report, wasn't able to trigger many meaningful upward action yesterday. So you can see yesterday, in fact, we have even some sort of the inside action here. That really shows that market really heavy and has no power to continue move high. So if you take a look at the forward time frame chart, we see that's the 2 targets that point approximately on the same area. That coincides with the target, and in fact is the target of the engulfing pattern on the daily. That's approximately 1150 area. We could get the ABCD, as we said, based on this pattern. We also could get the butterfly here, if market will turn down right from here. That will have approximately the same targets around 1150, 1152. But on the common week, guys, we mostly will work with these candles, with these patterns. You could ask, what do you see here? So it's nothing really interesting. What is it? Well, guys, first of all, take a look that we have bearish grabber right here. And this grabber is still valid despite of this upward action and trend shift, because the invalidation of this grabber stands right here in the top. Only if market will taken out of this top, that will lead to the failure of this grabber, so raising of the grabber. But this is only the half of the idea. The second part is simultaneously this grabber, as you can see, the high wave pattern. And the feature of the high waves stands around its extreme points. So the high wave by itself is not a directional candle, but it indicates usually indecision or just some sort of the when investors take some pause or have no really ideas on the possible direction. So maybe we could call it as also an indecision. Anyway, and the breakout of the high wave pattern usually points the further direction of the market. But simultaneously here, if market will taken out of the top, it simultaneously will erase the grabber. That's why this candle will be very significant and important in the coming week, maybe in the beginning of the week even. So that's why here we will be watching for breakout of this candle. If market will turn down and taken out of these lows, it will tell us that probably the downward action to 1150 has started. Of course, taking into consideration all that we have said about the daily chart and all that you will read in our analysis on the monthly and weekly charts. That's why on the hourly chart, guys, I just show you the situation, how you probably could take the short position if you would like to do this, of course. There are two ways how you could do this. First way is to wait when the market will taken out of these lows, the lows of this high wave pattern. That is a conservative approach, because in this case the direction already will start to develop. And for example, if market will break through this consolidation, taken out of these lows, you could take the position on some retracement. Or take a look what we have. If we will base our analysis purely on the grabber qualities, on the grabber features of this candle, you see that grabber has been formed. That is an invalidation point of this grabber. And market right now stands in the 618 retracement back inside the body of this grabber. Okay, so that's really perfect setup for possible taking the short based on the grabber with the stop somewhere above this area, and the stop will be not very significant, so approximately $4 or $5 per contract. So it's really very close. Not really big risk taking of this position. Besides, guys, take a look at this consolidation. It remains flag pattern, and take a look at the shape of the action. That's definitely not the trend. That's definitely not the impulse action, not the thrust. That's mostly retracement. Upward, downward action, attempt to move high on ADP. Erasing of this upward action, choppy. Non-farm pros really is backward action, so it's not the thrusting action. It means that as soon as this is just a retracement, it means that sooner or later it will over, and the market should continue with the action that was before that. Here market, guys, by the way, has failed to pass through our resistance. Recall that we have discussed previously. That was our resistance cluster, 2 fib levels, weekly and monthly pivots. 12 even we said that on the previous week we have called for taking the short in this area. As you can see, market has failed to pass through it, and by this action it confirms the bearishness. Turn down. Now it turns to some retracement. So that's our current view on the gold market. It doesn't contain yet absolutely clear patterns. So you can see the price action is really very choppy. But if you have attention to the details and you will read our analysis, you combine all charts in a single picture, you will see that market right now is really weak, and we should be ready probably to further downward development.